Hello traders, Cousin Vinny coming to you from theclosingprint.com on February 21st, 2016. In this video we'll cover the indices which all ended higher on the week. Trends, we could possibly be stalling at previous highs that we saw on February the 1st where we reversed, and then S&P 500 dropped 7% and the NASDAQ 9%. We'll have to watch out for that this week. Tick and Tick Q are both higher. There's a possible respite or a pause there as well. NYSE and NASI are both higher. Breath is positive. CPC put call ratio is at 1, so there's no signal there. The New York Stock Exchange high low is above 0. That's a positive. There's always macro risk, of course. Dollar yen turned a little bit lower last week, towards the end of the week. China currency devaluation still in the forefront, and the capital flight continues to exacerbate the current situation there. US dollar monthly, prices below the 10 SMA, and of course the yen is pushing a bit higher. Bonds of all flavors moving a bit higher after a pullback last week, although the UST SPX bond stock ratio is a bit bullish. It did turn back down. Commodities, crude oil is higher. The 10 EMA is about to cross above the 30 EMA, so we'll watch for that. Gold is about 16% higher since late December. It's going through a bit of fluctuation currently. Sectors, IYT looks really good among many other sectors. Overall, they look constructive. Bukowski, all green up arrows, and of course we'll look at the IBD50 and possibly some other setups. Taking a look at the spiders for a moment, we have this double bottom that we saw similar to August and September. We're looking for a peak above this 194.58 level, and of course this 192.75, 193 zone. If we push above this and encounter resistance at the 50 MA, it's one of the things we'll be looking for. And also we have a Kirby overhead as well. So this could be a double bottom, as Bukowski pointed out this week, thanks to you, Karwitz. Possibly, but we need to get above these levels here in order for prices to continue to move higher. MACD continues to drift higher. Tick cumulative continues to point in the right direction. Volume on the sell side was less than what it was on the buy side, but we're still below the daily average. Stowe is in the overbought red zone and could turn back down. So let's watch what happens. The 50% retracement is just overhead, right at the 50 period moving average now. And of course we've got that Kirby to deal with. Peeking at the NASDAQ 100, visually we have a volume by price band in this range right here where prices encountered resistance. We have a little bit of a pocket there, and then resistance starts again just above the 4275 to 4300 level. Keep that in mind. We had a nice week on NASDAQ, pushing higher, and a nice pullback to the 10 SMA, the 10 EMA, which is also drifting higher. MACD is pushing higher. Volume looked better than the spiders, and we also have Stowe in the red zone. Stocks above their 50 period moving average are at 34, moving off the lows. That was a good sign. We've been watching that for the last few weeks. Then just overhead we have the descending 50 period moving average, so we'll watch for resistance there and what happens here going into Monday, Tuesday trading. Small caps also look pretty decent. Connecting these lows, we bounced. We have the 10 EMA trying to cross above the 30 period. No prices are stopping right there at the 100 level. Stowe is in the red zone and could turn back down. We could flag and consolidate in this range here. You can see where we have previous resistance to price action. Look for the 10 EMA to cross above the 30. That would be a telltale sign going into this week's trading sessions. Here is the S&P 1500 composite of the top 500 big caps, the 400 mid caps, and the 600 small caps. Faring fairly well. The price action is just above the 10 EMA. The 10 EMA is moving higher. Stow is just about ready to get into the red zone, and MACD is above zero. We have the 50-period moving average overhead, the blue line. So we're looking for a push above this 448 level. If that should happen and we manage to close above, then we have the 50 period to deal with. And then, of course, above that is the 460 level, right around where the 200 period moving average is. So we'll keep an eye on that, as well as the NYSE and the Wilshire 5000. The latter is a broader measure of the markets. We have the same levels that we saw on February the 1st that we need to get above. We also have the 50 period moving average right overhead, descending rapidly, right above the 20,000 level. Being this is 5,000 stocks, we're very interested in seeing how this plays out over the week. Note, shaken money flow continues to be positive and uptrending, as well as MACD and commensurate momentum. And last, of course, is the NYSE composite. 2,000 stocks. We're looking for a test of this 96.51 zone plus the descending 50 period moving average this week. If we're bullish, if we're bearish, we want to see prices turn back down and head in the other direction. Note, up volume looked pretty good on Tuesday and Wednesday of this week, and then towards the end of the week there wasn't much conviction in the way of institutions. NYMO is pushing a bit higher, and breadth looks pretty good. So let's take a look at breadth. The NYSE new highs minus new lows is a simple measure of breadth. We can see that we're above the zero line. Not the greatest impetus in the markets currently, but it is positive, so we're watching that. Having been negative much of the past several weeks, and then pushing higher, of course. Looking at the NYA with Bollinger Bands, we're above the 20 period, we pulled back, tested the 20, and then closed higher, so that's a positive sign. And then, of course, NYAD, we're watching that to break above these highs that we saw in February, and breadth continued to move higher. Here is a simple measure of breadth with the New York Stock Exchange advanced decline at the bottom and S&P 500 at the top. We see that level on February the 1st that we need to conquer with the 50 period moving average just overhead. This is the measure that we like to watch. This is a 5 period moving average of the NYAD, which is invisible in this case. So we're watching this 5-day moving average, which is lagging. And when it gets into the red zone, typically that's when we start to see some resistance to price action moving higher, and, if you will, a bearish tone to the current price action. So we'll watch price action, we'll watch order flow, and what happens here with this indicator in the red zone. Our standard measure of breadth, of course, is the McClellan oscillator. This is for the NASDAQ, the NAMO, obviously above the zero line, bullish. Here's the NASDAQ Elder Impulse, all green last week. And of course, NASI, the summation index of breadth, is moving higher, having crossed its 10 period EMA. Consulting NYMO for the NYSE McClellan oscillator, we see the same thing. NYSE McClellan summation index continues to push higher as well, having crossed earlier in the week. And our last breadth indicator that we like to watch is on the New York Stock Exchange composite. It is the high-low indicator. Basically, you want to see this moving higher and cross 50, which would indicate new highs are expanding. When it pushes higher, it's actually bullish, and when it turns, it is bearish. You can see a slight little turn there towards the end of the week. We'll see how that works out going into Monday, Tuesday trading. Currencies, here's the US dollar. This is the double Bollinger Band. One standard deviation is the darker area, and 2 standard deviations are the outer bands. We came outside of this area last January, the end of January into February. We bounced. We could look at this as a flag, but we had a shooting star on Friday. We'll watch how this develops. The 20 period's just overhead, And all indications are that it looks like we're going to start to pull back a little bit on the US dollar, which means, of course, the yen should be doing just the opposite. We had that low in late January, that blast higher, and then we pulled back. We're inside the bands between standard deviation 1 and 2, and watching how this plays out. Typically with this strategy, you want to watch for prices to continue to move higher inside of this banded area. We'll see how that plays out this week. And here's the same double bands, double Bollingers that encompass the US dollar Japanese yen pair. Prices hit the standard deviation 1 and got rejected. We do see a little bit of buying towards the end of the day. We'll look for that to resolve itself this week. But for now, if we see the US dollar continue to push higher, putting in a higher low, that would be good for equities. If we see the reverse, though, and the US dollar Japanese yen pair move lower, that would be bearish for equities. Shifting gears, looking at the bonds for a moment. With all the talk about negative interest rates, that would fuel the fire for bond prices to move higher. TLT bounced last week and now is moving higher. STO is turning up after hitting the green zone, and MACD is positive. So watch TLT if you still have a position in bonds. AGG, the Barclays Aggregate Bond Fund. This is a lot more than just bonds. You can look through this, pause this, and read through. But for the most part, we saw a hammer on Wednesday, Thursday, Friday, continuation higher, back above the 10 EMA. We can see MACD is positive and above zero. Needs to get back above its signal line. STO hit the green zone and turned back up. So that's bullish for AGG, TLT, IEF, as well as VBTIX. The latter of which is the Vanguard Total Bond Index Fund. It's an institutional fund. We use this fund when we are bullish bonds. Prices continue to move higher. We'd look for a handle here possibly and then a break higher, especially if we continue to hear more about zero interest rate policy. Here is junk bonds, J and K. We have this area building that could be a base forming. It is a descending channel. We are watching prices at the 10 EMA, the 20, and of course the 50 descending overhead. We're seeing some volume. STO is in the red zone. MACD continues to move higher. If the oil patch continues to look better and oil prices move higher, we could start to see junk bonds continue to move higher. This is from the Cadusa website. That's KATUSA. This is North American E&P net debt. Now you can see the prices of WTI are in black here. As prices move lower, actual total debt continues to increase. And one of the reasons is the banks don't want to be holding this debt, so they're willing to renegotiate the terms on a lot of these shale companies' debt burdens to help them through this period of time, because they don't want to be owning assets that they don't know how to operate and have to deal with all this debt on their own. So they'd rather have these companies more solvent and try to push prices higher. So watch for junk bonds. It could be a sign that things could be looking better going into the oil patch. Also, we obviously want to watch for oil to move higher. Here is another chart of the realized oil price that's moving lower, WTI on the left side, and then interest expense continues to move higher. So banks and the debtors are going to have to work this out. Keep an eye on these particular issues going into the week ahead as it impacts equities. Looking at commodities for a moment, copper continues in this downward channel. We'll watch for a breakout here. Gold continues to consolidate here. It looks like a little pennant above the 10-period EMA, above the Kirby. We have a shelf down here right at the 1200 level where prices came back down and bounced. No surprise there. Quite an appreciation in prices from the late December lows up to recent highs outside of the upper Bollinger Band. We are watching gold very closely for any more appreciation or possibility for a pullback. We'd love to get into it on a pullback to around 1150. The rising 30 period moving average, the 50 is just below that. Here's the 20. And stochastics turning back up. MACD's positive and above its signal line. So all indications are gold could break out of this pennant. We'll be watching it this week. Of course, everyone's watching for crude and WTIC in this case to push a bit higher. It's not a vote of confidence for the markets in general that it's so tightly wound around the price of crude at the moment, but it is what it is. Note the 10 EMA is trying to cross above the 30. We haven't seen that since late September into October. So watch that price action. If price can manage to push higher, forget about the political side. There's a big impact. We have to consider that the Iran output will affect a lot of these nations that saw brighter days when Iran was producing oil and the Shah of Iran was in power. Now, I don't want to get into political issues, but there is a big impact to these countries that border the Middle East, these Middle Eastern countries. Looking at the sectors for a moment, IYT looks very good. It's above it, both its 20 and its 50, flagging out here. Keep an eye on this sector. Transports, airlines, truckers, and rails, as well as the Baltic Dry Index, for any indications that we could see a tailwind in prices. We could, of course, roll over, but we do have support of the moving averages just below price. XBI is trying to build a base, moving higher. XLI actually looked pretty good this week as well as XLF. Do note that Stochh RSI is in the red zone overhead, so we could see a little bit of a pullback or consolidation with all these sectors. XLK had a good week, as we mentioned earlier in the monologue, as well as XLV and XLY. When we look at the ratio of sectors between XLP and XLY, consumer staples to discretionary, a bullish indicator of sorts when this indicator is moving lower, and a bearish indicator of sorts when this ratio is moving higher, as we can see here from December into February. We did peak and turn back down. We had a little bit of flattening right here, but it looks like we're going to turn back down. So watch this simple ratio for an indication that we might have a tailwind in equities if discretionary continues to pick up. Also watch the sector and big names in the group, like Nike, for example, as well as Foot Locker and a few other names high on that list. Here is the new IBD50 list. There are a few new names. Make a note of that. Note that Priceline is back on, Pool is back, ABGO, and so forth. So we'll look at a few of these names in a candle glance format and scan through these really quickly. Most of these look pretty productive and supportive of higher prices. Note this breakout on ELS. Nice flag on 5. Global Payments. GPN, Global Payments. A lot of these stocks are above their 20 and 50 period moving average. Keep an eye on that. Nvidia is back. Haven't seen this name on here in over a year. Nice price action on RYAAY. That's Ryanair. Remember, transports. SSC. Southern Company. Moving higher. Store. Nice flag. Moving right along, or pennant right along the 10 period EMA. A lot of these names look pretty interesting. So make a note of them and chart some names going into the week. Toro, nice push higher. XRS, TIL Education in the consumer services industry group. Cyclicals. Note nice price action here. Nice flag. This could break higher going into the week. We'd like to see Stochh reset again. MACD's above the 0 line and its signal line. Nice looking chart. We traded this one back in late September when it broke out above the 10 period EMA. You can see what happened. MACD managed to stay above the 0 line and stayed above same for quite some time. PCLN, this is one that Russell likes to trade. Note the gap and go from my book as well as the video and the strategy series. If you want to check that out, you can find that right here on my blog, as well as a premium video section which covers a lot of the strategies from the book, expands upon them. If you're a new trader and interested in improving your trading capabilities and lose less money, check out the premium video series on the blog site. The web address is right here, theclosingprint.com/cb_blog. And of course, the tabs are over here on the right side. So with regard to PCLN, this is a nice stock that Russell likes to trade. Nice gap and go. We have resistance overhead. We have this volume by price band. We're coming into prices right now. Note all the volume. MACD's back above the zero line, and STO is overbought. We're looking for this to possibly pull back into this stick that we saw on Friday. Doesn't mean it has to happen. It's just something that we're watching for. NVIDIA is another gap and go. More than likely this was related to earnings. The 10 EMA is trying to push back above the 30. A brief pullback and markdown for price actions both above the 10 and the 30 at the upper Bollinger Band. It looks like this is going to continue to move higher coming into the weeks ahead. Watch STO. Maybe it resets. MACD could get back above the zero line. Nice volume. Stock looked really good. Semiconductors, we noted a lot of names in that group were starting to look much better going into last week. The other thing about these stocks, when they start looking good, that's another tailwind for the indices. VNTV, software company, technology. Nice little flag here at 50 above the Kirby. Got a little bit of a band here to deal with and overhead prices, but it's above the 10 and the 30 at the upper Bollinger Band. MACD is above the zero line, and STO is overbought, but could continue to embed at these levels. CDNS, Cadence Design, software as well. Note nice powerful action here above the 10 period EMA. Could get into this Kirby level. Nice volume. Obviously institutions picking up shares. Prices had pulled back, moved back above the 10 and the 30, and the MACD is above the zero line on this technology name. Citrix Technology Software, trying to break out of this channel looking pattern. The 10 EMA is trying to conquer the 30. We have this Kirby pocket overhead. MACD is trying to get back above the zero line, and we're seeing somewhat nice volume following through on last week. Broadening pattern here. ELS trying to break out. It's a REIT, Equity Lifestyle Properties. MACD's turning back up. STO is in the red zone. Five below, building a nice pattern, having broken above this trend line, breaking out at the upper Bollinger Band. Long-legged doji on Friday. Price action inside of this Wednesday candle. We have support down below at 35.10 more or less. MACD is above its zero line. We could see STO reset and then turn back higher, and this price action continued to push to 52-week highs. A lot of these names in the XLF sector are helping to push prices higher on that sector. MSCI, Specialty Finance, nice price action over the last 2 weeks. The 10 EMA is back above the 30, and price could get above this volume by price band above 72. MACD is above zero, and STO is pointing higher. Cores trying to push higher. We had this as a gap and go, got stopped out on this first red candle right here. Nice gain from 47 up to that area around 51. So we got a nice 4 points out of that. Pulled back to the 10 EMA, it held, and then you build another pivot and a trend line in here. So that's how the gap and go plays out. Something you might want to check out if you're a new trader. Nuan Communications, new name on the IBD50 list. Nice, pretty chart from the respect of price action. Held down below the 10 period EMA. The 10 EMA turned back up. Now price action is bolting above both. We have this beautiful Kirby up in here, up to around the 2050 level. MACD is turning back up, and STO is in the red zone. Keep an eye on this one. This looks kind of interesting going into the week. I'd like to see a little bit of a pullback, maybe to 18 or 1825 or so. Inside of that Friday candle and then push higher. Doesn't mean it's going to do that. It could just bolt higher on Monday. One other thing to consider is the Berkshire Hathaway portfolio. I haven't checked this, but for the most part, I think this is pretty accurate. What Warren is holding and what prices look like, what price action looks like in some of these stocks that he holds. Walmart actually looks pretty decent considering the current news that you hear out of the markets. Held the 50-period moving average, price is moving higher. The 10 EMA is above the 30 and all the other moving averages. This actually looks pretty decent in my humble opinion. MACD should turn back up and stow as well and see some continuation here. Liberty Global is another name in the group. Note this Kirby pocket here. Price is right at the 50-period moving average and flagging out. Stow's above 80 and so is MACD above its zero line. Many of these stocks that are in Warren's portfolio are some names that you should consider for potential buys. XOM, this is a highly touted dividend-paying stock. We can see the yield here, 3.54%. This is a name that I got my mother back into. We sold GE and bought XOM for its dividend and safety. GE did manage to recuperate a little bit, having moved lower, and then looks like it's trying to get back above its 50-period moving average as well. Coca-Cola, another name in Warren's group. Note it's attacking 52-week highs. This stock actually looks pretty decent, reinventing itself over the years to not just be about Coke products, but energy drinks and the like. Keep an eye on this stock going into the week. And one last takeaway is the number of stocks that are buying back their shares is a little bit alarming. If there wasn't so much buyback, we might see more outflow in the capital markets and equities in general. So keep an eye on these names. IBM's at the top of the list, buying 9.8 billion shares of its own stock. American Express, ExxonMobil, Hess, and Chevron, as well as Qualcomm. Speaking of IBM, note the 50-period moving average, price action above same. The 10 EMA is turning up. This could continue to move higher. Now, I haven't confirmed that this is still in Warren's portfolio, but I think it probably is. Price action looking very good going into the week ahead. However, it is one of those names, as we pointed out, buying back its shares. So is this appreciation due to that or some other catalyst? You have to do homework and find out. Okay, so this is Cousin Vinny coming to you from theclosingprint.com. Be sure to check out my blog for you new traders out there. Just enter your email, click submit, and you'll get these email updates on a daily basis. Typically, we have a game plan for each day, and we outline what we're thinking and what price action could do and some possible trade setups going into the week. Check out my book and the videos in the premium video section. This will help you lose a lot less money and learn how to trade with a rules-based strategy approach to the markets. Take care, and we'll see you on the stream on Monday.